Hi everyone, welcome back to another episode of Gate Pass Market Monday. I hope everyone had a great Thanksgiving, got to spend a lot of quality time with friends and family this past weekend. So we're officially in the month of December, and looking back historically, December has actually had the highest probability of being positive in election years, being up 83% of the time. So we'll see if that trend holds through this month of December as well. But everyone knows this time of the year, Wall Street loves cranking out their annual forecasts and price targets, right? So we're starting to see price targets for S&P 500 for 2025, inflation guesses, rate cut guesses around a lot of things. You name it, they have a guess for it, right? So it's really important for investors to take a step back and take a lot of this with a grain of salt, because a lot of this is really designed more for entertainment than actionable insights, right? We kind of joke internally, but a lot of it is like throwing a dart blindfolded, right? Somebody is eventually going to hit the bullseye or get close enough to the bullseye, but you don't know who it's going to be beforehand. So while we don't put a lot of credence into the forecasts themselves, these forecasts can help us formulate and be a tool for us as we look to really build out our pro and con ledger for 2025, right? And before we actually get into our ledger, it's probably helpful just to take a step back. I always like to go through how the market backdrop looks first, right? So going back to 2022, the market obviously knows it was a very rough year. We had economists calling for 7-8% interest rates, economists calling for a hard landing. The S&P had a very rough year. So sentiment felt very terribly, right? But going into 2023, looking back in hindsight, it was actually a pretty good setup, because if we just reverted back to the mean, we were going to have a good year. Now looking out to 2025, things are a lot different, right? We had strong years in 2023 and 2024, and now we just had a historic election as well. So when we look at our ledger right now, on the positive side of things, we have lower taxes, right? We're going to see probably tax cuts in addition to the extension. So there's some scuttlebutt around corporate tax rates going down to 15% from 21%. There could be some talk around capital gains, may see the reintroduction of SALT. So we're going to see some type of tax stimulus, right? Robert and our team is keenly focused on that, and we'll keep you abreast as we continue to dive deeper. Rates are going lower. Yes, they're going lower slower than we anticipated, but they're heading south, and the Fed's in a great position right now. We have a very balanced employment market, so employment is not so tight that employers can't hire, but unemployment is also hovering around all-time lows as well. Growth's still solid, so GDP is still growing around 3% right now. And then we also have this, we're still very early in this tech and infrastructure boom as well. So that's on the positive side of things. When you look at the negative side of the ledger, there's really three things that stick out to us, right? So tariffs, yes, we're going to see tariffs. Trump said that we need to level the playing field. So that probably means tariffs on a lot of products coming from a lot of different countries. So presumably prices will be going higher. We're going to see less government spending. Yes, that's great on the deficit side of things, but government spending fuels growth. And then market valuations right now are pretty full, right? I mean, call it 24 times what the S&P's trading around. So that's what we have on the negative side of our ledger going into 2025. But what's really striking to us is just this rapid rate of change and this technological innovation coupled with a whole new administration coming in, right? So to say we're working overtime, to say the least right now, but data still suggests for us to be constructive heading into next year. It's definitely not that all-in moment that we saw in 2022 going into 2023, but the data still is very positive right now. So what's an investor supposed to do, right? So at the end of the day, stick to your wealth plan, right? We're telling clients, not much has really changed from last year going into this year. You still want to own risk assets like stocks. You ride the kind of the economic growth and the corporate profit growth that we've been seeing, but you also need to have that fixed income and cash balance that lines with your risk tolerance, right? Because you don't want to be left naked when that inevitable tide rolls out, and there is going to be some volatility and some corrections that we're going to see into next year. So we'll hit the pause button for this week and wrap it up there. But that's really kind of how we're viewing the world as we head into 2025 right now. We're still pretty positive, still feel that we're firmly in this bull market right now. But we'll see everybody next week. We're officially in the month of December. Have a great week ahead. Thank you.